Hi guys, and welcome back to the Mindful Investing channel. Today I want to share a compelling deep value investing opportunity that currently pays a 13% dividend, trades at a negative enterprise value, and has the potential to be a multi-bagger over the next couple of years. The company I'm referring to is Sundart, a Chinese Nano Cap stock. Before anybody accuses me of trying to pump a Chinese Nano Cap with low trading volume, let's start off with a quick disclaimer. Please do not take anything in this video at face value, and always do your own due diligence before investing into anything. I currently hold around 76,000 shares of Sundart at a cost basis of around 34 cents. With that out of the way, let's dive deeper and try to assess this investing opportunity. Founded in the 1980s, Sundart has grown into a large fitting out business, mainly focused on hotels and service departments in Hong Kong, Macau, and mainland China. In 2022, Sundart generated revenues of approximately 4.7 billion Hong Kong dollars, down from 6.1 billion Hong Kong dollars in 2019, primarily due to COVID and the consecutive strict lockdowns in all of China. Another important thing to highlight about Sundart is that it's majority owned and therefore also controlled by Jianghu Group, a large player in the building industry in China. Whilst this certainly is a risk, until now Jianghu has not abused its control to do shady things. As mentioned before, Sundart provides fitting out works for mainly hotels and has therefore been severely impacted by the strict COVID measures in China. If we look at daily tourist arrivals in Macau, for example, which is one of Sundart's key markets, we see that there have basically been no significant tourist arrivals from the beginning of the COVID pandemic in 2022 until the lifting of most of restrictions in early 2023. While Sundart's share price has been absolutely crushed over the aforementioned time span, being down approximately 90% over the last 5 years, which surely is also due to the overall shareholder hostile actions that have been put in place in China, its profitability has actually been only impacted by around 45%. While Sundart generated EBIT of approximately 537 million Hong Kong dollars in 2019, it still generated around 298 million Hong Kong dollars of EBIT in 2022, a year severely impacted by lockdowns and travel restrictions. Nevertheless, for Sundart to be a great investment, it would not even need to get back to its 2019 profitability. Based on the closing price of around 47 Hong Kong dollar cents on April 3rd, Sundart trades at a PE of roughly 3.5 times. What is even better is that Sundart trades at an EV/EBIT multiple of negative 2.2 times. But how can a company trade at a negative EV/EBIT multiple, I hear you say? Well, either the company's EBIT is negative, which like we have seen before is not the case, or the company trades at a negative enterprise value. Exactly this is the case with Sundart. So assuming there aren't any positions included in the enterprise value calculation that we would need to adjust, the whole company is basically trading below the value of net cash. But let's just double check by having a quick look at Sundart's balance sheet. To be conservative, let's just assume that all of Sundart's receivables due for more than 60 days, as well as its contract assets, which are accounted for using percentage of completion accounting, which is already a shady thing on its own, are worth nothing. Further, let's add varying discounts to Sundart's other assets. Even when doing this, Sundart's entire market cap is still covered by the liquidation value we just calculated. Therefore, when just looking at the company, there's basically no risk of losing any money. Still, we need to keep in mind that Sundart being a Chinese company, the biggest risk when investing into Sundart is the China risk, as well as potential accounting fraud, which given that Sundart's accountant is BDO and recognized global accounting firm, this risk should be quite low. As we have just discovered, apart from the overall China risk, there's basically no chance we can lose any money on this investment. But what could be the potential upside? Let's assume the overall fitting out market recovers to its pre-COVID level. Sundart generated earnings before tax of around 540 million Hong Kong dollars in 2019. When deducting taxes of approximately 25%, that would leave us with net income of around 400 million Hong Kong dollars. Even when putting a quite conservative PE ratio of 5 times on that, Sundart would still be a 2x from now. and we wouldn't even give any credit to its significant net cash. When assuming a PE of 10 times, which isn't even too unrealistic, Sundart would even be a 4x. But those assumptions aren't really that relevant. Even if Sundart would just trade sideways over the next couple of years, we would still receive a 13% dividend each year, which will likely grow. So that's about it for today's short dive into Sundart. If you enjoyed the video, please leave a like and feel free to ask any of your questions in the comments. See you next time.